Hello, this is Russell and Big Gun and Rog, and we're going to show how we created the UAT line from back, I think, a couple years ago.
2022.
And 2022, yeah. So Big Gun showing the wave analysis on wave 50 daily. And what we do is we look for correlations of where we're at on the graph for price. So when we figure this out, we look back on our left-hand side and see where we've stopped in the past on our lows. So there's a line that Big Gun's drawn from the far left that's kind of reddish, I guess, in color. Looks kind of reddish, kind of purplish on my side. Yeah, so those two lows that were stricken out during that time frame, those are critical because it shows we actually bounced from that area. So what we do is we draw a horizontal line over to our right, like we did on Sunday, and we name that the UAT line. And that was important because it showed that there was support at that point in time. If we look from those two stricken lows on the far left on that line and go a little bit to the right, we'll see a peak. And that becomes a support zone. So we know that if that area is respected, and we can have a little bit as we talk daily and as we know daily when we experience this stuff, if we have a little bit of an overshoot, it's fine. The market's just confirming that line, because what we like to see is an overshoot and then a reclaim of the line. So we want to overshoot it, reclaim it, and then that puts a potential support area on the map. So we know it's good. Using this information, then we can go over to TradingView and we can, or TOS or Webull, whatever, any trading graph, and we can set up these areas. So we can mark these areas out for key areas to look at. Just like in the UAT line, I think it was a night or two ago, we got down to the low, Big Gun's drawing over here on the left, and we got to a low area and then we bounced off of it. He's showing like the 2008 line right there. And you can see how we bounced off that, like literally almost to the penny, right?
Yeah.
Couldn't be any closer, yeah, for all that time. So then we bounce off that line. We go up to the, is that the UAT line up above?
Yeah,
the 2022, or is
2022.
that just a,
Yeah,
okay.
that's our UAT line.
Gotcha. So we bounce up to that, call it UAT because it was on Sunday for the user acceptance testing, the early people into the system. And so we go up there, we bounce above it. So we can see that strike, that extension we create off the 2008 to the peak above the UAT. So that set up a zone, right? So we've got a high to low, kind of carved out resistance. And then we can see forwardly as it tried to reclaim that peak. We went up to reclaim, test it, see if we could break above, failed, and then we come right back down heading towards the 2008. So the market's carving out a cycle. Once we reclaim that, then the market, we go through a consolidation period, and then it tries to reclaim the UAT line again, and we have an explosive move up. Our trajectory should be such that if we draw a kind of a horizontal, well, an ascending line, like if you draw, I don't know if you can draw an ascending line, Big Gun, but if we take the UAT, yeah, exactly. So we should be able to create some semblance out of a line like that. And in the fractal system, to us, it's an open state. So in the fractal system, when we look at it, we should see, and we did a on the QQQ, a 460.6 open state, which was right up there, which we achieved yesterday. So that closed out the trade. Now we're having reversion back down. So, you know, we're looking at like the convergences and the divergences on the fractal to map over into our trading graphs for key areas to see if we can get, bounce and other things. And then we use the vector line, the vector code, to determine entry. So if we are in the 2008, we're in that low, then we would anticipate on the vector signal line for it to go green, have a climb, hit the top, hit open states, close those, reversion down. So we just keep playing that up and down. So we're back on the fractal side, and we can see how this is working out. And Big Gun on our UAT call, he mentioned, hey, these are vicious, right? When we hit these prior low areas, these key areas, we can have very strong rallies off. Like he was mentioning, it's not uncommon to have a 16% rally off of these, 12%,
Exactly.
11%. Yeah, which we
Exact
did. I think we had
22,
11, right?
16 actually from the very low on Qs. And our
16.
target was 14 from 2022 UAT.
Yeah.
So, you could say that roughly the 460 level was kind of our target of interest from, all the way when we were at 403. You can
Which is
also,
awesome.
yeah, it's
And
remarkable. But
it is. And Stocky Jockey mentioned, and when we were doing the trade, we picked a little more conservative call side on the QQQ live. But Stocky Jockey showed if you take your open lines and, you're kind of leveraging up, you can have $1 million day out of it. So it's important to know, these bounces like Big Gun showing that 16%. Exactly. It was a number he mentioned on Sunday. Hit that, pulling back from that now. But today, again, somewhat of a conservative play. We ran from the dollar range up to about 11 on our put side. So knowing this information is very key to having big wins if you want to, or not. Take more conservative plays. You don't have to always try to hit the ball out of the park. So Big Gun showing like what price action there could be next, right? So when we're coming off our line going up, we've got a level of resistance there. And if there's another shoe drop in the market, you can see how bad it can get. It could be a pretty severe pullback. Um, Everything's on the table. So I know looking at this stuff, you can discount it and say, oh, that's impossible. I can't ever get down that low. It sure can. So it's important just to mark out the levels, watch the price action around the levels, and we watch the vector for any hints of entry into puts or shorts, or, if on futures selling or buying, sell side, buy side. And again, he's showing like the violation. Now, what we could be doing too is we could be having support. And another thing to consider is we could start a new leg up. So it's very possible we come up here to the yellow line, break through it, move back into positive territory on the bullish side of the graph, bullish side of the pivot, and then start a new leg up, another rally up. And if we do, what's key is our imprints over to the right. We need to break exactly what Big Gun showing. We need to break above that. And then that puts in motion a higher rally. We've got imprints that are suggestive of where we've been going in the past. Two, we have open states that we can use. These imprints are just, low hanging fruit, prior price memory. So we can target those upside. Across the tops of our crests, we have our H values. So it gives us an idea of how many aggregations it takes to get to that H value, that high, after crossing over pivot. So we've got 428 aggregations. I believe those are daily aggregations.
yes,
that required to get to that prior high. Now, another thing that we can see on the graph is these prior highs, like let's say we did run a long play. So we do have a descending resistance line that is starting, that's across there. And then we have another one that goes from our two most recent highs
Oh,
running
yeah.
down.
Okay. Yeah.
So yeah, so we've got actually, yeah, we've got two. We had the other one, we've got that one that are targets, resistive targets. And it's interesting. Look how it almost runs into the imprint on the right hand side when you drew that big gun.
Yep.
Pretty close to that imprint. So we can see that it is very suggestive that we could get to that box and possibly blast through the box, kissing the top of that um, descending resistive line. So that's something to look for too. So want to make sure, since we're trading, want to make sure we keep an open mind. We can come up to the line and drop, or we can come up to our line and then get back above pivot, and the world's not coming to an end, and we move back long again. So we'll have to see what happens. And yeah, it's all basically on Trump if he decides he wants to implement tariffs again or not, or whatever other alignments he wants to do worldwide to get a reactive event, get price moving. So these news events, the ones that are critical, are things that are just not talking head stuff on like CNBC or Bloomberg. They're events that can cause financial damage or financial assistance, either way, to the economy. So we'll have to see if they start talking tariffs again. As Big Gun showing, we can peak up, go down, knock out lower open states, and potentially go all the way down to that very bottom one, which would be pretty painful for everybody. And what's that, the 25, 35 or
20,
25?
2500 SPX.
2500 SPX. So that would get everybody freaked out, no doubt. And we can sit here and see that all day long. That's a possibility. And we can see the open states above that are a possibility. So it's kind of up to the big guy, I guess, in the White House as to what gets dished out to propel the price action. Because basically, traders, institutions see what we're saying. We're like institutional grade data. So it's basically that event. There's some causation to create that event to move up or the event to move down. So traders are already looking at where that could be, just like we are, and just waiting for that event to send the price in motion. So we'll have to see. One thing that has been a little concern of mine is regulatory stance on the AI stuff. So if more and more jobs seem threatened over time, they can start to put more and more regulation. And the whole stock market's built on technology, built on innovation, and that can stymie it if they come in and if there was regulatory action. This is not immediate, but just over the next few years as things heat up on the AI front. There's already some things for NVIDIA for copyright. So there's some lawsuits in motion for copyright violation, and that could really weigh heavily on the market. If they lose lawsuits for copyright infringement, because their whole business model, when you think about it, is built on harvesting data. So just like Trump with the tariffs, if that's big impact, if the copyright infringement plays against NVIDIA, DeepSeek, the Chat GPT stuff, OpenAI stuff, all this stuff becomes in question because their whole business model is built around harvesting information. And a lot of the information they're harvesting is, of course, copyrighted material. And all they do is aggregate it, put it back together in a different way, and dish it out. So, depending upon what comes out of that, that could be another market moving event. I traded through .com, and there was a company called Sun Microsystems. They could do no wrong, just like NVIDIA. Market was built on Sun Microsystems, and they had the Spark servers, workstations. And with the internet craze, they were pumping out these servers like crazy. Well, if you go look at Sun now, they basically fell apart, and I think Oracle acquired them, I believe it was. So what was the darling of Wall Street at the time ended up being garbage later on. So something to keep an eye on. One of the first big trades I had, I made 70, 80,000, like just hours. It was on Go Video. And that was back, I believe, in the 80s, late 80s. And I made it in a few hours. And what happened was they were in a lawsuit, and they had a VHS system that was also with beta. So they had a box that had VHS and beta in it. So you could record from one format to the next. You could transfer your video. They were in a big lawsuit. They won it. There were people trying to rip off their technology. They ended up winning the lawsuit. So I had pre-positioned just hours before, and I was using technical analysis, this kind of stuff. And the trade hit pretty big. I only had several thousand in it. And so that was one of the big ones. So, anyways, that lawsuit had taught me that, hey, that's a really market moving event. There's winning and losing sides. So, if you're on the winning side, it's great. From the losing side, not so good. So, NVIDIA has that potential market moving event come up. That would have big repercussions for the entire market. So, not only does Trump have the tariff things, that's another thing in the pipeline that I could see that could be really critical given the market. A lot of it's built on this idea of AI, right? Harvesting data, dishing it back out to customers. And NVIDIA, too, I mean, they also go into clients that are proprietary and they set up systems and stuff, using, not them exactly directly, but the chat. GPT, the open AI, they'll go in and be using their processors and stuff for all that. So there is that revenue stream, and that one's protected because they're, authorized to do it, of course, being hired to do that. But just in general, on the public side, that could have big ramifications for the entire market. So something we need to keep an eye on. And other than that, I think it's just a matter of now trading the wave sequences that are coming out and just staying with the flow of the market overall over the next few days and adjust as we go. So I don't know if you guys have anything else to add.
Regarding your point on NVIDIA and kind of, some other magnificence, Scott Bessent, the Secretary of the Treasury, has been absolutely vocal about pinning, the recent decline on. We had these analyses and write-ups since kind of December regarding vol markets and the magnificent hyperconcentration. And it seems like now the Trump administration has a convenient scapegoat to blame for the market decline and that those magnificence. He had an interview with Bloomberg, I think, right after the Liberation Day announcement, where he says, the recent stock market downturn, he says this verbatim, is not a MAGA problem. It's a MAG 7 problem. The NASDAQ topped on DeepSeek Day. That's his verbatim words. And so if you want to, see the current, equity market as kind of a battle between two sides, right? Where you have one side, whose idea is controlled demolition to achieve X objective, and then another side who is to, hold against the controlled demolition, right? You can see that, um, the Trump side kind of is really, pushing hard against this. There's not, any Fed. He's trying to force the Fed's hand. Some say to cut, quantitative easing to prop up the markets. And so, really, is the question is this battle? How does this battle between two sides play out from past sequences?
Yeah, definitely. It makes it an easy scapegoat to say, oh, those few stocks are messing everything up for everyone. Definitely.
Exactly. And so we can kind of see, we had our fractal perspective kind of pointing to that magnificent hyper concentration effect from like a quantitative perspective. But now we kind of are seeing the groundwork being laid for, how is Trump going to explain away, the decline that has taken place from his rhetoric, right? We can already see the foundation being laid.
Yeah, that could be bad if he gets on if these companies get on the wrong side of his temper, could really put some pressure on him.
Exactly. And so when we compare like what stops, past corrections from unleashing into like a dot-com crisis or a 2008 crisis, typically we do see it's the Fed, putting their hand into quantitative ease and prevent it from continuing. It's not always that way, obviously, but something to look at. What could happen if the Fed refuses to intervene, right, on behalf of the current market decline is this 2008 sequence, as we can see from the linear chart charted over this 5400 to 5500 on SPX. How are we playing relative to these levels? Right, we had our bottom from the box shown, the green box, right, and here's our symmetrical resistance zone. Today, people are crying about almost having a circuit breaker today and rejecting the symmetrical resistance zone. So regarding, what Russell's showing is the potential for creating a new leg up on the macro versus creating a new leg down. Today, as it seems, as we are currently respecting the 2008 thesis. That's just my perspective.
Yeah, definitely. I'll have to see what we get over the next few days and weeks. One thing that has helped is oil has lightened up in price, which will overall help the economy. So if that continues, I think we traded down in the 60s, low 60s on light sweet. So if we can continue that, that'll really help the economy, and that could help fuel a new up leg too. Trump backs off on tariffs, and maybe this threat will actually help, and they can renegotiate some better deals. So backs off on that. Oil stays soft for a little bit, and maybe in the 60s, and that will help lighten it up at the pump. Diesel, bring overall costs down, and that will help the Fed determine that they can maybe ease up a little bit. One thing that was different, like in 2007, 2008, when I was trading through that, they were doing the CDOs and all that, and they were just packaging loans together. Nobody even knew what were in these loans. They were just selling them off. And they were like, oh, look, you're going to get 12% out of this thing, and it's all collateralized, it's safe, it's all in American real estate or, houses or whatever, Joe and Bob's houses in it. And, the market was overextended. It's like up here in Phoenix area where I'm at, Casa Grande, they were just building houses left and right. They didn't even have buyers. They're building, they call them spec homes. They're building specs all over the place. They had communities that had 1,000 specs sitting there empty. And and here they're borrowing money. And I know there's Conley Wiswinkle up here, and he's, is a big land guy in Arizona. And he started a lot of projects, and they're going out there putting money down on, uh, big. So here, the big thing is to buy farmland and put houses, mini malls on it, movie theaters, commercial. So he would go out and he'd in tie with the farms here, and the farms control the bulk of the property, vacant property. So go out and do deals with them. He'd be like, "Oh, I'll pay you so and so down the road. We're going to put in a subdivision or whatever." And so some of them, they do like 300 million on, and so when this started unwinding, they're overbuilding. They don't have any buyers. I knew people directly they got like 12 houses, and they were using one house after the other to leverage. So anyways, the credit market was just booming, expanding. And as soon as that kind of popped, right, there's like just, the credit's like kind of maximized out, just ballooning out. And there's starting to be nobody servicing this debt because there's all these subdivisions and commercial installations that are, they call them see-through properties. So there's no rents coming in, and everybody's like, "Oh my god!" So it starts popping. So Bernanke at the time, he was chairman of the Fed. Dude was a student of 1932 crash, and he was just constantly arguing for, we got to put just massive amount of money into the system. He's like, I'm not talking billions anymore. I'm talking a trillion, to help with these markets. So they ended up doing these repos and stuff where they were going in and buying all this stuff up, the Fed, so they could take it off their balance sheets of banks and everything. So that's what helped. And it was a little different thing. That was actually this kind of systemic issue. And right now we've kind of got an artificial issue because the tariffs, they're just like artificially created by Trump. So it's like, one day he can say he can put them on, the next day he say he can put them off, at his discretion. And the other credit market issue was systemic, where it was the whole thing just melting down, because of the, you know, not being able to service loans and people starting to fall on back on the loans and not service them, and declaring bankruptcy and stuff. So anyways, this, we could conceivably very much bounce off this trend line that Big Gun's showing, and we could conceivably very much so get back over the pivot, or at least start consolidating. So yep. So I'll have to see how it plays out. I'm kind of thinking, it might be more of a balance than anything, with the way that, because this is a very common fractal pattern I've traded over the years. These three touches on his supporting ascend line. I was showing that Walmart contract the other day, and Walmart, it just kind of skyrocketed on the contract. I kind of had three touches ascending support line, so could very, very well get back and going positive again. So
Yeah, that's a great point. We can see these past interactions. Forget, I think this one of these is 2018, 2015. These touches the 2015 flash crash, and then that volatility event, Volmageddon, as some people know it, in 2018. Also have this past interaction here. I think, I'm not sure if we showed. I'll show on the 150 daily QQQ before we wrap up real quick, because that was where we got the 2008 line. Same, basically the same setup on SPX that we were just showing. 2008 line Qs. You see COVID stops here, Volmageddon, flash crash, 2008, your 2022 correction. So you could definitely say we're approaching symmetry with that 2020 flash crash low and that 2015 for sure.
yeah, definitely. And it seems like, I don't know, Big Gun, but it seems like to me Trump kind of blinked on the tariffs and
I
he backed
absolutely agree.
away. Yeah.
And I do think, and the truth is, like, so my opinion of kind of a big point of like why he was intentionally trying to cause equities to downturn or slide, is to cause yields, like a demand for 10 years demand, so they could actually refinance this. They have $28 trillion of debt in the next 4 years to refinance, and I think 9 trillion this year. So it's a major point of interest to try and bring yields down. And what ends up happening is they end up beginning to liquidate this massive, this is just from what I've read, a massive basis trade on the treasury markets, as well as also cause, for example, Japan, who has to now bail out their banks. They are having limit down circuit breakers. They are also now having to sell treasuries in order to finance those bailouts. And so you could definitely say that he blinked and had to sort of reverse course. I mean, he's tweeting out, it's a great time to buy, and 4 hours later, doing this announcement. So I definitely think that he's blinked in some way. The question is, is he going to blink again and reverse course back to the original objective, or is he now going to, complete the full 180? Right.
I,
So
uh, that's a really good point, because it's like kind of like which way the wind blows right now. It seems a little bit like, I don't know if he comes on and says, I'm going to throw another tariff event out there. Uh, he might. I think he might back away from that because I think by now he would be like, you know, it's just too much for people to take, you know. So
And he's
that
talking
might
about he's
be,
seen watching Jamie Dimon complain about him on Fox News, like, and I mean, he's pretty, honest about what kind of is going through his head. So is Besant, which I admire, at least the honesty on that.
yeah,
So I really do wonder whether, we could see obviously these past symmetry with the, COVID lows, flash crash, 2018. So the question is, do we continue to see this direction of the 180 he's talking about, or does he, go full on China? It's the million dollar
yeah,
question right there.
that's a good point. So when we're looking at our fractal data, I'm seeing like two distinct waveforms. One is where we get below the vector, and it's just continually, dropping. We kind of get these dead cat bounces and a new drop, and dead cat bounce and a new drop, and then I'm seeing like that's an L182, and then I'm seeing these L8, L6, L1, L22, where we kind of just immediately V out. We come down, carve out that low, and whatever creates the condition clears up, and then we move back above pivot and carve out a new extension, new leg up. So yeah, it's kind of like the $1 million question. Are we running this L182? Like, does Trump have an about face? It's like one day one way, next day another way, so that it creates an L182? Or is it like, okay, blink, I got to back off. Everybody's just panicking, and then we eventually regain footing and get back over pivot. Kind of tend to think it's more like an L6 and L8, but that's just like an experience thing. Since it's more of an artificial thing, um, if it was more systemic, if it was more like something was seriously wrong with the economy, that would be a whole other story. Most recessions are over, I think the stats 9 months anyway. So as we pull back, we're starting to chew into that time. I think 9 months is kind of on the extended side too. I don't know how many months uh, the L182 would exactly represent because there's 2 days on the in the week there, but I don't. I don't know. I don't see much else wrong. The only other event would be the Nvidia thing out there. Something happens weird there. You know.
Yeah, that's I mean, what I see right now is they kind of are at like a fork in the road, but they've laid the
Yeah.
groundwork at least to blame a further correction on Nvidia. From a sector analysis I've been doing, kind of looking at these past corrections, what happens like for basically your first leg down, your tech, your finance get to the bottom of the list of performance, and so then the dead cat bounce, those will rise to the top of the we've already been seeing it play out the last 2 days, but those tech, your finance will outperform. We have JPM earnings, I think tomorrow, if I'm not mistaken. um, so if you want to talk about systemic issue, what do they disclose, any sort of anything weird, right, with their earnings tomorrow. There's a lot of speculation to that. I'm not smart enough to give an opinion on it. Um, that's a question of interest where you could potentially see an acceleration higher on this pullback bounce, where we kind of are now challenging that resistance of the dead cat bounce into a true macro leg up. I think one thing also of concern, as we'll kind of have to show it on like a day-to-day approach, but volatility markets are absolutely critical. Yesterday's collapse in the volatility market, VIX, several different tenors, kind of set like a time bomb for a whipsaw back down, so to speak, from a fractal perspective. We also saw that on our shorter time frame index like QQQ, way 51 minute, I think, something like that.
Yeah. I was looking over your graphs, and it does look like it's set up for that, for lower volatility ahead on the VIX. It looked like from your
Yes.
graph.
So that's like that whole it's a good measure of whether there is a systemic concern. And also, from one thing we mentioned on the UAT was that going into Monday, there were options providers were not willing to provide liquidity to relatively like at the money and like just out of the money puts. They're absolutely unwilling to provide any liquidity to those going into Monday. And so it seems like, the whole kind of what was fake once fake news and now real news that comes out on Monday sort of triggered this, prevention of a collapse, right? That market makers, institutions were, potentially implying through how they were pricing those options. So there hasn't really been any major like holes, so to speak. I guess comparable to Monday that I'm seeing. So that does potentially signal from that, how are these guys willing to provide liquidity for me to, buy puts betting on a circuit breaker, or are they not willing? It seems like they're a little bit more comfortable doing so now.
Yeah, no, it's true. One point you kind of mentioned with the earnings and stuff, I saw this happen, or I saw a potential setup here for way more downside. And that was as the market. So a lot of the bond market's huge, much bigger than stock market, was over 10 times. They get graded, right? And there's not a lot of companies that have very good grades. And the grades are also questionable too. But when they grade them, there's like AAA status. And then it starts to turn into junk bonds. And those are just companies that are barely surviving. We're seeing that in a day-to-day economy. Like I like to go to Golden Corral. They've kind of closed. All these Darden's been having a hard time. Um, and then a lot of the malls in Phoenix area and stuff have kind of closed down. So, anyways, what happens is those junk bonds, to attract people, they have to pay a higher interest rate. Well, also capitalization of the stock market gets important to them because they can use capitalization to also show whether or not they're decent status, financial footing. As the stock market falls and these stocks get just shredded, it starts to hurt that. It starts to spill over. And so I was worried if the stock market keeps pulling back greatly, it can start to show more and more cracks with more and more companies having issues, defaulting on bonds. And the bond market's a little bit squirrely because I think a lot of the companies are very over leveraged. They'll have a lot of debt on their balance sheets. We've been seeing that as some of these places are closing down and stuff. And they blame Amazon. Well, they're taking all our business. But the reality is in the US, everybody, I believe the M2, the last time I checked at it, there wasn't a lot of discretionary income available. It had kind of peaked during COVID when they were giving out all the checks. So that's kind of worked its way down. I remember Megs and Trade Lounge, she was mentioning that, like, oh, the economists are freaking out on the M2. And I was like, I don't know if that's too valid because, they're pumping out all these checks and stuff, overinflating it. So at any rate, the paycheck to paycheck thing only goes so long in our economy, and it starts to have businesses collapse because there's just not enough money in the system. So I was starting to worry that the stock market kept pulling back, start to show up more collapse in companies and stuff. So hopefully that's not the case and it's kind of working itself out right now and we kind of V out. So I think Trump, he's probably feeling pressure on that too, because like Big Guns mentioning Jamie Dimon, yeah, he was pretty gung ho at first. If you check him out months back, yeah, these tariffs, we got to kind of straighten some stuff out. And now he's like, oh, this is just a nightmare. It's a disaster. Well, yeah, they're starting to see that businesses underneath of them are going to suffer and it's going to hurt their revenues. Stock market starts pulling back. Like my mother-in-law, oh my God, I'm down 14 grand. I'm down 20, 100, on her 401k. And so it just causes people to dry up. And it just further escalates. So hopefully that's not the case. I know Jamie Dimon, running Chase, he's just like real sensitive to that, of course. So I kind of feel like they'll, or well, it's more of a mathematical thing since we're carving out these L2, got L6 and L8s running over there that, you know, ideally there's probably more of a V in store here for us because I think they just have to act. That's one reason Trump had to pull this stuff. It's just causing too much financial damage for the U.S. So I don't think he can go there again right now.
I agree. One thing of consideration, so like, we can look at actually our 2008 fractal here and see that like, you know, the bounce from the current low is a V bounce. Like a QQQ equivalent of this move would be roughly like 490 QQQ of this exact like specifically tech sector move playing out right here. And this is over the course of, I think, March 2008 to midsummer 2008. And so a question is, how do we react as we come back up into the pivot line and those imprints we were kind of showing? An inability to get over those, imprints right above the pivot line or right below would be a sign of weakness potentially in kind of rolling over the V and not respecting it later on. Um, and so, like 2022, this bounce is like about a month from trough to peak to coming back down again, right? So you're absolutely right. Like this is a matter of timing where like we're looking, L1, L22, L8, probably next 10 to 15 trading sessions from Monday. So the next like 2, 3 weeks from now, our we want to watch how like whether we come back to interact with that 2008 line, the UAT line, and kind of set the stage for continuation long, because we do see that these short-term breaks of the low are what come to set in these L100s plus, right?
Yeah, definitely. And if I just look at the graph, kind of at a 30,000 foot level, we've got two deep pullbacks you're showing. You've got the white line from L41 on over to our L2. And then so through this entire time frame, we've got these two deep pullbacks. And if we look out on the horizon, I mean, what in God's name could be out there to cause that? And I mean, I don't know. I, you know, hindsight's always 2020, but right now, looking forward, I'm not sure. Barring the tariff stuff, I'm not sure there's anything. Like you're mentioning, we've got banks and stuff, and if we started seeing people not being able to make, I guess, their mortgages and the credit card payments and, any commercial payments on malls and uh, grocery store leases and purchases, I guess, we could have that other shoe drop down. But so far, I mean, it looks like you're keeping, your eye on those way more than I do. So you're probably better in tune, definitely, than I am on what's going on there. But I think, I mean, there'd have to be some probably hardcore event come out that would knock us below your white line. I would think, you know, maybe the banks will be like, oh my God, nobody's paying, but that could do something. Other than
I
that,
definitely agree. Like so what you mentioned, you say like, is there like a tightening of credit right now? It's not nothing, I guess, glaringly obvious, right, to the naked eye that we can really see. Um, I'll say 2008, actually, I'm kind of looking over. We actually did create a 1H over this summer before then entering this L sequence. So this is potentially suggestive that, like, you know, just because, for example, like the yellow box on the S&P breaks, like, I'm not saying short all the way up. Like, that's not the way to go about it, but don't necessarily be fooled if we could complete, like retrace like 75 to 90% of the pullback we've seen before creating this, of like there could be some other systemic event or artificial event or whatever comes in. I'm trying to remember. You know better going on than what's in 2008 than me. Kind of like what sparks the March, like the spring 2008 move, and then what caps us at in summer 2008, if you have any recollection, Russell.
Yeah, I vaguely remember. So Kramer was yelling one day on TV on CNBC, "Oh my God, the whole thing's coming unwrapped, unglued." And so Bernanke at the time, the chairman of the Fed, student of the 32 crash, was coming in hardcore, like, man, we got to throw money at this problem. And like I said, he's like, I'm not talking billions, I'm talking hundreds of billions, up to a trillion. We've just got to do whatever it takes. So what happened was there was this bounce that was incoming, and the problem started seeming deeper and deeper and deeper and going on for longer and longer and longer. And then I was on a cruise at the time, but I remember I was watching TV, and it was on a Sunday. And I remember this vividly. I'm watching TV in our cabin on the cruise. Everybody's over at Shearson Lehman cleaning out their, you know, desks and stuff, right? They're like, because the thing's closing down. I was like, oh my God. And I can't remember the specific date, but I wouldn't be surprised if it's not that lowest part on your chart, Big Un, down at the bottom. It was just like the whole world was coming unglued at that point, and it was spilling over worldwide too. So I think these first bounces were like Bernanke's coming in. Oh yeah, we're gonna like throw money at the problem, and then it just started deepening. Oh my God, it's worldwide, and the whole world is just gonna fall apart, and we're all gonna starve to death. So I think that's what it was. It was just that continuation, as I remember. So started, 2008, 2007, and it just kind of leaked into those 2 years. And a lot of the times, you have to get to the light at the end of the tunnel. And I think the tunnel was just like that deep at that point. It was just coming more and more light of all these issues. And so, the Fed just starts throwing money at the banks, and those guys are all patting themselves on the back saying, oh, we did a great job. We're going to give ourselves bonuses because we finally V'd out and started climbing again, So everybody's getting their golden parachutes after they were giving out all these loans. And part of it was Obama administration. They started doing it where they were kind of forcing people into loans. And back in 32, they put in this 32 kind of had a similar problem. The credit markets caused the collapse in Wall Street. And they put a law in the books. And Clinton signed it out at the very end. And so it kind of stopped the way banks could organize debt. And they were trying to hide it, really, and trying to profit off these organized collateral obligations, the way they were putting them together, so you could never tell what's inside of these. But yeah, when those just everything as it started unwrapping, it was just deeper and deeper and deeper, and finally we got to the bottom. And I was trading fractal information through that, so I could see what we're seeing today. And I was like, well, we've got to wash out. And you can see down there, we kind of have the little dragon pattern. These patterns kind of occur. So kind of got the 2 feet down there, and then the head form, and then off to the races we go, back above the pivot. Right now, we're kind of lacking some information on our L2. Maybe we're Ving out, or as Big Gun points out, like we're talking, like maybe we go back up to the pivot and then something else comes in and we roll back down that's worse. But again, the tariffs are kind of artificial. So probably it'd have to have some weirdo black swan come in that we're not aware of, like the Nvidia thing, like Big Gun's mentioning, like, blame on that because they're, you know, theft of IP, right? And nobody can do that anymore. Um, can have these AI type systems that are public, that are not proprietary. So maybe something weird like that. But outside of that and the bond market, I don't know, maybe something really weirdo happened there, would happen there, but causing debt issues and inability to sell bonds for
That's
a
something
lot of
of
the
definitely of interest. Like, one thing actually Trump alluded to really early on was, freezing certain treasury bonds and not allowing, redemption of, certain, do you remember he's, like, saying,
yeah.
something about fraudulent bonds being issued, and maybe it's a a red herring, I don't know, it would be a hindsight kinda
It,
thing, but
it very well could be. You could be onto something there that maybe there's stuff being hidden there, not being disclosed. Very well could be. It's like we have such limited visibility into it, from our
exactly.
perspective. So could very well be something hidden there. Um, hopefully if he dinks too much in the bond market, I know he's not he tells the Fed what they should do, like, oh, you need to bring rates down right this second. And I get it. He of his companies, I'm sure he gets reports from time to time. I think he claimed every day he gets reports on his desk about how they're performing sales and stuff like that. I don't know as president now if he's that super involved. He seems to be very vested in being president, but he sees the economy unlike we can even see it with his holdings, because travel is very much impacted when things are bad. People, that's one area to cut back on, right? Travel. So he can see this stuff show up way before the Fed can, or, you know, most other people in their sales and their gross profits and their net profits coming in daily. So yeah, he could be on to like you're saying, Big Gun. He could be on to something. Um, maybe something's going on we're unaware of right now. This seems to be all tariff related. It's artificially created, but yeah, maybe something else comes along. But and the recessions, they just come along from time to time, anyways. My mom will tell me all the times, "Oh, Democrats create war, Republicans create recessions." So Republicans are always trying to bring in the money, trying to control spending, by and large, mostly. And Democrats are always, very more into social programs and stuff since Roosevelt. So, so this is not, my mom will be like, well, this is like totally expected, right? So I'm like, yeah, okay. Um, she's always telling me everything.
Yeah, the amount of people that I've heard in the last 5 days say this was all I've been laughing every time because,
Yeah,
like, we can see with our fractal data, like, we preposition, for example, the 40% decline on the world's largest company that's kinda coming in at this correction. Other like a lot so many other things that we were ahead of the game on and had like quantifiable actionable setups from this stuff. you know don't, One lesson to learn from this is do not let the talking heads, whether they're on the news or in your family, dictate your views
yeah,
on the markets and stuff. Because if I listen, for example, like, I had actually my mom like give me a call like the other day, I think I was on Monday, asking like if I was okay and doing all this. I explained, I'm like, I don't know if you remember this conversation we had back when I was home for Christmas break, like explaining like this is a controlled demolition, that controlled detonation, whatever it's called. And she kind of recalled that you have been shown it. There's been other individuals showing kind of this the whole scale of the bubble, kind of as we were getting into late November, early December of last year.